Well, good morning, everyone, and it's great to be able to participate in the mining conferences here in Toronto. Toronto is my hometown. I wish I could be there right now with everyone, and I wish this event was live in person, but through the wonders of technology, here we are. So a few weeks ago, I had actually presented in this conference during Election Day in the United States, and the presentation was entitled Vision 2020, the election night. And in this instance, we get to now call it the aftermath. And I hope to provide additional insights based on everything that we observed between the election up to now, in addition to, how we actually got here and where we're actually going, and to be able to provide the audience with some perspective and insights towards investing and various different asset classes worth watching, in particularly related to the commodity space. So this shouldn't be any surprise to you, but like one of the major themes this year that I have seen is basically the rise of the individual, or the rise of the polymath. And that term, trust the experts, have gotten us into so much trouble. And I just wanted to start off this presentation by saying that never again will I trust supposed experts in so many different fields and industry, when we're talking about health, various different sciences, when we're talking about polling data, when we're talking about estimates, when we're talking about economic projections, when we're talking about so many different figures. The latest one that I've seen is how basically retail investors have outperformed hedge funds, which is startling as it relates to basically 2020. And if 2020 has proven anything, is that people that thought they had an idea have no idea whatsoever. So just wanted to leave that note for everyone as we start this presentation. So trust the experts, never again, for me at least. So the question is, how did we ultimately get here? And in my previous presentation, I highlighted the fact that we are now seeing this massive dichotomy, a shift between ideologies, between the left and the right. How we actually ended up originating to the stage that we're at is such a vital and important question, and it really is connected to the commodity space. And I'm going to share to you a little bit about that right now. And having come from Canada and having seen what it's like in Canada and having spent time in Asia, I think that this next observation is going to connect and relate a lot to the audience. So when we take a look at how ultimately where we got to where we got, we need to simply think about stability, and how stability has effectively been used by authorities and governments in order to justify the creation of big government, or to justify the creation of small governments. And the original form of stability has always been related to, say, for example, soft commodities, particularly as it relates to food. And one simply needs to look throughout history to observe that countries that started off with low caloric variability, as in maybe there's not that many people that are starving and maybe people are well fed, primarily a lot of those countries coming from below the equator line, would actually tend to have big governments. And what's interesting through my study of Asia, and having originally come from Canada as well, is that countries with high level of caloric variability tend to promote small governments. And this then leads to everything: food security, oil security, all forms of commodities that would ensure safety and security for the populace. All these forms of security will then relate to, let's say, big governments, and minimal amounts of security, let's say laissez-faire capitalism, would then relate to small governments. So very important insight when you think about the world. So if you're spending time in Canada, perhaps when Canada was first colonized, look at it and realize that, hey, there's not that much of stuff that we can actually extract from Canada at that time. And therefore, perhaps that's how it led to the rise of a nation, which shifted from basically what you see in the Hudson Bay all the way to the Pacific. Now, mind you, the path that Canada ultimately chose was through the monarch, through the British Empire. That's a whole nother story. But our neighbors to the south went a very different trajectory, and this is going to be one of the variables that explain that. I'll explain more on that shortly after, but key thing is, if anyone ever asks you where democracies come from or where authoritarian regimes come from, this will answer that question for you. And it's not about culture, it's more about the features and the commodities that that country had, primarily above and below ground, that could be used to provide for the populace. So people then that were able to have food security or minimal caloric variability would then fall victim to big governments. And as a byproduct of big governments, they would become effectively slaves via debt bondage, via high taxes. And one of the environmental ramifications of all of this is basically a massive terraforming of the land. So for example, when you look at big governments, you're going to see massive industrialization that's happening, first and foremost. Then you'll see massive infrastructure projects happening. And the origin of all of that comes from the farming and agriculture using pesticides to pretty much ruin the topsoil, ultimately causing a desertification of planet Earth, all while generating substantial tax revenues to allow the big government to spend a lot to basically put a massive amount of debt over our heads. So that's kind of the narrative when you understand the core role that commodities play in terms of ensuring security, which then ensures the ability for the state or an authoritarian regime to generate or to identify predictable forms of income, such as from agriculture, to be able to tax and then to become bigger by basically inflating debts, all at the expense of basically the land. So that's kind of like the route of what happens when you head towards a more leftist paradigm based on the caloric certainty that is provided by the states, which ultimately comes from the environment itself. So on the subject of debt bondage, I just wanted to add to everyone a perspective of what's happening this year, or basically the next 12 months, is that you're going to see about, in the United States, Standard & Poor's estimates that you'll see about 12.5% of companies basically declare defaults on their credits. This is kind of connected to the debt bondage idea. And that number of 12.5% of all companies in the United States is now equal to that of the previous Great Depression. So remember, some of these companies are unable to fulfill their liabilities, and the average taxpayer in North America, based on everything that's happened on 2020, now has a substantial amount of debts, unelected or unvoted, basically decided undemocratically on your heads, which you are now accountable vis-a-vis through taxes. So I just wanted to take things from the past and just kind of give people an update on what's going on and think about how that's going to take us into the next, say, let's say 6 to 8 months as far as June 2021 is concerned. So going back to the different paradigm shifts, there was another paradigm shift, which is more of a right-wing perspective. And a great case example of that is what you see in terms of the United States and how you see us moving from the East Coast all the way down to the West Coast. Now, if you think about the stereotypes of cowboys, well, one thing you could be certain about is that they didn't have various different forms of security, right? All the stereotypes that we hear about is about gunfights. For sure, taxation would America was shifting from the east and going into these new frontiers westward. These individuals were pretty much like nomads, or what we would refer to this day and age as the gig economy, with very little, like, basically representation for them within the government. So therefore, again, very difficult to tax. They weren't really doing agricultural as they shifted westward. They were more just looking for things such as gold rush that were happening. Just on a side note, when you think about agriculture in America, in particular during the formation years of America, you know that slavery was also a big role on that. So just going back to that concept of agriculture used for slaves and then being able to generate taxes by the state or the province into, like, let's say on a federal level as well. So that's kind of the difference between countries that had less resources to utilize for the governments to ultimately project the yields for the purposes of taxation. And what you can see is throughout various different studies that you can see that on average, lower tax rates do lead to the average populace perceiving lower tax rates as being ultimately more free. And hence why maybe in the United States, taxes is such both a left-wing and a right-wing issue. One side presents the idea of higher taxes to basically ultimately service the debt. And then there's another side that says, hey, our Constitution has elements of liberty and freedom, and therefore we should try to keep taxes as low as possible, despite the fact that we are going into massive debt as well. So it's very important for us to understand the origins of these dichotomies, why certain economic features or taxes, for example, or the perception of taxes are all connected to various different paradigms. And by us understanding these paradigms, we should have an idea on where we're ultimately going, which I hope to explain to you within the next several minutes. So this is going to be a really interesting journey for everyone. While we have these paradigms, we definitely see the use of technology that has played a role. So when you think about agriculture and you think about the tilling process, and when you think about pesticides and how that has ultimately allowed for large scale agriculture, that's an element of technology, folks. And technology, again, has technology is historically a massive enabler of centralization, or better yet, technology is a massive enabler of big governments. And you can see how technology is used in the three major industries in which my organization breaks down GDP with, which is agriculture, manufacturing, and services. When you think about, let's say, China, or when you want to think about the United States, each economy is at a different phase of one of these major components of GDP. And you can see how technology has been a massive enabler of basically generating tax revenue for the states, and making it definitely much more transparent for the state to understand how these individuals are making money. So for example, you can think about the service industry, and you can think about Grab drivers, and you can think about the role that big tech is now playing, and how basically states and provinces are thinking about how they can tax even new disruptive technology. So if you understand the trajectory of technology, at first it sounds extremely disruptive. It sounds like it's game changer. A current technology such as cryptocurrency sounds like, wow, that could decouple us from centralization. But definitely the technocrats are thinking about how to use technology as they have done in the past for the purposes of greater control and centralization. Hence why China has such a keen interest on technology and has these objectives for, let's say, China 2025, and how the United Nations is thinking about the year 2030 as well. So always think about that. Technology, as we see in the modern day via big tech, is a massive enabler for centralization, despite the early initial disruptive elements. So when we use technology and when we think about the recent lockdowns and when we think about the distinction between essential and non-essential, what I have done is I've thought about various different trends that are happening in our world, and this is connected to the commodity space as well. I think of things the real economy, or a better word is the physical economy, versus that of an economy of numbers, math, ideas, and technology. So what I did right here is I just think about, for example, the difference between money in circulation versus the total amount of physical money within the system. And then I think about the amount of physical money within the system versus the total money, maybe the number of money that's on the computer screens, for example. And this is all based on central banking. When I think about the real money, for example, such as precious metal, you might want to classify as real money versus the fiat money. And when I think about like the average person, wages, what they make in the real economy versus more esoteric figures such as GDP. And then when you think about the idea that the poor is ever so present when you walk down Bay Street, for example, but the rich sometimes prefer to be absolutely invisible. So it's so important that even if you're in the commodity space, for example, to understand that this centralization that's being enabled by technology and the technocrats and basically big governments really does prosper from an invisible economy that grows irrespective if you are working or not, irrespective of how much gold you have, because of their ability to inflate the system with fiat money, for example, and make various different pockets that they select to be much more wealthier, irrespective of the fact that maybe GDP headlines might sound great, but wages are stagnant, and irrespective of the fact that, let's say, there's only like 2,000 billionaires in the world versus a population of, let's say, billions and billions of people, there clearly is a massive juxtaposition between what we see in our everyday lives versus what we're only hearing about, and is basically the lives of only the elite few. So it's very important to understand that. So understand that the commodity space is very much connected to this real, let's say, real money or hard assets or physical assets that do not have the ability to scale as effectively. And you can see how they're creating derivatives and basically future markets and derivatives of commodities, which actually really distort the impact of various different, let's say, precious metal prices, which a lot of people feel frustrated about. So it's so important to understand how this invisible economy has basically encroached our entire lives, particularly with 2020. So with all of that as well, is that we are basically living these juxtapositions that we see between like the amount of total people in our world versus the 2,000 billionaires on planet Earth, and like everything I told you about real physical money versus basically all this fiat money. Are we not living in this age of inversion where everything that most people understood to be true is actually false, and everything that we think is false is actually now true? And there's so many different examples of this, countless examples of this. I can give you the one that I hear a lot of finance talking heads talk about, which is basically, oh, that's not the real economy. That's what they say. But the whole thing is that irrespective of this real economy, basically this fiat economy, this numeric economy that has superseded this real economy. And the true best way to deal with that is to understand that as a truism, and as opposed to fighting that, which you cannot, as centralization and big government and debt starts to become bigger. We'll talk about an implosion later down the line, but as it becomes bigger, we have to be pragmatists and understand the inversions that are happening. I'm seeing this to be a really big issue as well as part of the left. This fixation with this idea of winning and losing, and what we used to think was a win is now a loss, and what is now a loss is now perceived as a win. And this is definitely happening. You can definitely see this also in media. What was typically like, let's say, laissez-faire capitalist media is now becoming centralized. So this inversion is really happening, and it's actually working towards additional centralization. So where's this ultimately all going? When I study the multi-thousand-year history of various different countries around the world, it leads to a cycle, basically. The reality is that countries don't last that long unless you're like a world reserve currency, for example. You might have some durability. You might have a duration of, let's say, 200 years or 250 years. But most countries that that are not empires actually only have a lifespan of no greater than 120 years. And some people might still say, hey, Peter, what are you talking about? That sounds still very theoretical. But when I think about 120 years, I've heard of people that are living 120 years. And as a byproduct of that, if countries aren't lasting that long, as demonstrated via their currency and their ability to basically implode, we just have to understand that countries and governments go through those cycles to a point where basically all of that fiat money and all of that debt is no longer serviceable. And maybe they don't have the luxury of being a world reserve currency. And therefore, these countries basically implode. And I highlight for you kind of like the stages on those red bullet points on the sequence on how this ultimately happens. Because, people seem to be very fixated on the state of the United States. And in my previous presentation last time, I did say that basically, yes, like maybe the United States, well, it's almost reaching basically a 250-year history, which is the average age of an empire. But maybe even if the United States is reaching towards Pax America peak, that the reality is that if you look at Great Britain or the United Kingdom, is that they're still around, and they used to have the world reserve currency. And I'm not saying that the Great British Pound is doing phenomenal, but at least it's alive relative to so many other countries that are ceased to exist. I'm actually in Vietnam, and I've seen many people that are actually older than the government of Vietnam. That's why people say Asia is so young, because first off of all the democide that's happened, but these countries don't really last that long because of the mispractice of big governments, as indicated slightly earlier. So despite all of that, there are really interesting opportunities that exist. And I refer these as like pockets of light. If one studies, for example, the latest US selections, or if you just think about like the shifts that are happening even within Western states, you can see that, wow, like there are some places that are, let's say, left wing. There are some places that are right wing. I think it's so imperative right now to identify these pockets, which might not be drawn out by geographical lines. They have to just kind of be understood to exist. Some of them are easy to identify through geographic lines, but some of them are like, let's say, rural places might have a particular bent, or basically the suburbs might have a particular bent. Is it in the north? Is it in the south? This is how I identify, basically even people I choose to work with, is identify those pockets of light that might not be as obvious as one may think. And it really does imply understanding where they think in terms of various different paradigms in order to see if that's going to be a good fit. And that also applies to identifying investment opportunities as well. We have to be pragmatists towards this. Again, I'm going to state that. I'm indifferent to almost every single asset class as long as it does one thing for me, which is go up. And I'm going to share that to you right now. So what is Vision 2020? Vision 2020 has basically been the ability for me to identify investment opportunities all throughout 2020. Earlier, I had identified to you that hedge funds are substantially underperforming retail investors for whatever reason, which again is an indictment on this idea of trust the experts. But what I'm going to present to you is this amazing strategy that has been back tested and proven to work in an environment of 2020 and beyond. Why is 2020 so important and critical? Well, if you're an economist, if you're in the commodity space, if you're an investor, you have seen the actual choice by big government to shut down demand and supply. They literally are determining when it goes on. As a result, so many different sectors and industries and people are affected by it. But the question then is, what can we buy? What should we invest in order to make this work? So I present for you a simple way to think about investing and the asset classes that we should focus on. We need to think about the two major variabilities, either a world of a closed economy, a lockdown economy, that would then benefit this invisible economy, driven by the technocrats, as I mentioned to you earlier. That's one paradigm. The other paradigm is the possibility, buy the rumor, sell the fact, by the way, the possibility of an open economy that then could help benefit the physical economy. So it took me some time to think about this as it relates to the preferences that, let's say, a current president-elect might have and certain trends and sectors that he favors, while also addressing the key thing, which is, okay, a closed economy versus an open economy as it relates to concerns over COVID. So this first line right here, long gold, in an environment where you have a closed economy and this invisible economy rises. Well, one of the criticisms towards gold has always been how it's impractical, right? Everyone says that. They just say it's just a store of wealth. That sounds, from an idea of an asset class, that sounds quite invisible to me, even though I understand that many would argue that it is real money, but it is kind of impractical, as opposed to oil, which is extremely practical in our current environment and in our economy. So think about last week, Monday, or actually last month, Monday. Think about Monday. Wow, time flies. Think about Monday, in which big media just declared a president-elect, and then we had Pfizer come out and say that we have this cure, this vaccine that has demonstrated 90% efficacy. Okay? On that day, you saw gold decline 4%, and you saw oil hold up up to 2 to 3%, if I'm not mistaken, as far as futures are concerned. That is one case example. Another previous case example was during the height in which oil had went down to negative, $36 an ounce, $36 a barrel. Right after that, as soon as we got a whiff of stimulus and slight optimism, we see this V-shaped turn on the price of oil. Now, during that duration, gold was heading towards an all-time high as close to let's say 1900, 1950. So you can see that gold does very well as we stay locked down from a perspective of uncertainty. And oil, which is definitely a much more vital component or vital commodity, particularly to the physical economy, benefits from the idea of opening up. So one could simply buy both simultaneously and prosper. That's the first example. The second example is big tech through and through. If we're going to be headed towards an omega point, which is basically the end of a country and the beginning of a new country, that is going to be driven, as I indicated to you earlier, by technology. So whatever industries, because when we think of technology, we're not thinking about it's in agriculture. We only thought of it now as far as, let's say, the internet is concerned. But the internet is so connected to the service economy and that plays what, a very large percentage of GDP. So you simply need to look at the encroachment of technology within the largest constituents of, let's say, the workforce or GDP to understand how effective it is towards additional centralization, which then ensures taxable income, which then ensures greater propensity of debt, which then takes us to the end or the possible end of a country. So that's kind of like why you can long big tech through and through. And that's why technology ironically has some of the highest multiples, because ironically a multiple or PE is indicative of the future. Well, there's no certainty in other asset classes besides a certainty that technology will centralize economies all the way to the very end of the economy. So here's the other example that I provide as well, is when I just say tech, then we can understand that as like, let's say the Facebooks of the world, things like that. But I do provide a more precise one. I refer to the NASDAQ as long when things were closed. NASDAQ was able to reach all-time highs, and we can put something like the Dow Jones, which you could also long as things open up. Dow Jones is a little bit more diversified, even though it's 30 companies, but there's elements of, let's say, Boeing, there's elements of big pharma in there as well. So that's going to benefit towards the perception of an open economy. So again, on Monday, the Dow Jones was up like almost like 5%. It pulled back after, but this index will be a major benefactor of the ideas of stimulus, whereas technology is already good through and through. A much more practical example, a position that I really like as well, is being long Netflix throughout this whole duration, because people are streaming content. I love content as an asset class for commodity investors. They will appreciate royalties, and I buy content for the purposes of collecting royalties. And then long AMC theater on the idea of the opening of the physical economy. Again, Netflix is more of this invisible economy. You can't go out, you're locked in, you can't go anywhere. Whereas if things open up, basically Hollywood has a whole bunch of movies they want you to see, and some of these movies are basically too big to fail for them, and it will affect their balance sheets, so they really need you to go in the cinema. And one thing people didn't tell you was that on Monday, I had actually a fantastic day. Not that no one told you that I had a fantastic day on Monday, but what the media doesn't tell you is that AMC was the best performing stock in the entire stock market on Monday, up as high as 90% pre-market, and I think it closed around like 50%. And people are just focused on things like hotels, which are up like 20%. If you're going to take a risk about the opening of the economy, you better get your capital gain at like a big, massive performance to take that level of risk or to waste that amount of time. Just think about oil when it was down minus 36%. Speculators that bought into the future contracts of the current month really needed to take that risk to get to that massive gain. That's what you're looking for. And that's ultimately why hedge funds are underperforming, because I think that the experts have no idea what's going on. And what I'm telling you will work, has worked throughout this year, and will continue to work. And basically the final position before I finish off is you can long US dollar the whole time, because the US dollar has been up throughout the whole year, despite the fact that people are making this argument of the decline of the US dollar. Remember, I just told you earlier, 12.5% of US companies are going to default, meaning they don't have enough US dollars. Well, that's just on a domestic level. The amount of sovereign debt the world over, plus corporate debt the world over, denominated in US dollars is somewhere between, let's say, I'm giving you a generous lowball, 14 trillion all the way up towards 24 trillion, which is due for maturity between now and the next 24 months. So for people that think the US dollar is done, you're up for a rude awakening. And if China didn't tell you that they were desperate to have US dollars, hence they signed this trade deal and they still basically didn't honor it, and they're so desperate for US dollars because they have a fake economy. If that doesn't show you that the US dollar is so vital as of right now, before things implode, you will start to continue to see that as more defaults happen throughout the year on levels of that beyond of the Great Depression. And again, if you're looking at the idea of the opening of the economy, think about something much broader, which is basically the S&P 500. And through and through, again, you could even buy all of these things right now, literally, and you could do very well because basically as the closed economy becomes open, the indication to exit out of, let's say, some of these commodities like gold, for example, or silver will be the fact that these asset classes are declining. So you can see that they haven't been able to make new highs because, I mean, as time passes, it becomes more improbable of the fact that we probably have to get out of this closed economy and then finally go into an open economy. So I which sounds so counterintuitive. Again, in an age of inversion, it's not counterintuitive. It actually will all work. You can buy US dollar, gold, and oil, and big tech all at the same time, and it will work for you if you understand the trends between the closed economy and the open economy. So thank you very much, everyone. So happy to be able to present some of my thoughts and my insights. Basically, I was born in Canada, and I spent all my time learning about capital markets in Canada. I spent a little bit of time in Asia as well, just trying to understand these rapidly growing economies. I now understand the juxtaposition of Asia versus that of Western societies. I look at the trends of what's happening in Canada versus that of the United States. And it's then now allowed me to see what is the most important thing to me, which is the truth, and to be able to capitalize on being a pragmatist. So thank you very much. My name's Peter Pham. I hope you can go onto our website and sign up and get our free newsletter and follow me on Twitter. I'm making all the calls and they're all doing pretty good. So I think you'll be pleased. Thank you, everyone. And I really miss Toronto.